It's our pleasure to welcome now Jeremy Nelson, partner at Element Wealth. Happy New Year, Jeremy.
Happy New Year. Am I the first guest of the year on the show?
Yeah, you are.
I mean,
how about that?
I feel like this is a real privilege.
That's awesome. Well, we appreciate the partnership and certainly appreciate you coming in to help us kind of sort through what we can expect now that 2024, which for investors overall, it's a pretty good year.
It's a
really good year.
Great year.
Yeah.
This is 2023, 2024 combined is one of the rare times that you get kind of those back-to-back 20% plus returns. Now, obviously, the longest run of that, 95, 96, 97, 98, 99 if you put total return, right, with dividends we got there. Going back into the 70s we saw it, and in the 50s we saw it as well. Every time it's a little bit different, and some people look at it and say, well, we had a couple really big years. That might mean that we're going to have a down year. I'll tell you, I've poured through this data, and there's not a lot of rhyme and reason.
Yeah, there's not, is there?
And if you actually look at the last 3 years, what the average price return has been per year, it's actually really historically normal, right? But that's 2022 was a bad year.
Okay.
If you look at it over 5 and 10 year periods, okay, now you're talking about some rarefied air where there's not a ton of historic precedents where the market has been stronger, right?
Yeah.
You're kind of in that top 80th percentile or so.
Well, we started out this morning. We've had a bit of a sell-off. Really never got the Santa Claus rally, right? In fact, we had the Santa Claus sell-off.
There was some coal in the stocking this year, right, with Christmas. Now, that doesn't necessarily say a lot about what the year is going to play out like. I do think that there's been a lot of speculation, right? And you've really seen, a lot of the concentration in the market. That's concerning to me, right? The percentage of the top 10 companies in the S&P 500 is, around record highs. Typically that kind of concentration is not a good thing. You want to see a little bit more broadening out. But overall, 2025 could go a multitude of ways. I don't think that we're going to see another 20% kind of year because the valuations are so stretched at this point in time. And I do think that the macro backdrop is a little bit more challenging.
Okay. Well, when you start thinking about fiscal policy, and I'm always a bit amused at just kind of diving a bit into the distinction in the political philosophies. But for wealthy people and those invested in the markets since Joe Biden's been in office, I would say it's been a lot better than the average person that's still working, that hasn't built a nest egg, doesn't have a great deal invested. Maybe they've got your standard 401k or something like that, but it seems like that those are the people that they're always railing about that are, I guess, receiving too much of the benefit, and that's exactly what happened.
Oh yeah, absolutely. Now, I mean, Donald Trump actually wrote a book with Robert Kiyosaki, and it was called Why We Want You to Be Rich. And this goes back all the way to, I think they wrote it around 2000. And it was just, what they really talked about was this idea of that America used to be a diamond, right, with a few people up top, few on the bottom, and a lot of people in the middle.
Yeah.
And that it's increasingly becoming an hourglass, right? So you're either being squeezed up or squeezed down. And a lot of that has to do with whether or not you have money. And when you get into, market trends like we're in right now, it does really start to separate the haves, the have-nots. Ben Bernanke back in 2008 during the financial crisis, right? Quantitative easing was supposed to spur the wealth effect. Well, the idea was that if people felt wealthier, that they would then consume more. And a lot of what we're seeing with the economic growth just revolves around consumption being strong because markets are up. People feel wealthy, so they're continuing to spend. Yet you've got record write-downs of credit card debt
Mm-hmm.
from the lower end of the economy right now.
Yeah. Yeah, it's a good point. And we've also got record amount of credit card debt being held. So it looks like the plastic was used quite a bit during Christmas. So that's the latest
Doom
data from
spending.
NerdWallet.
Yeah, doom spending, right? People will just get to a point where they're like, I'm not getting out of this, so whatever. I'm just going to spend it now. And right when we spend money, it gives us those endorphins. We feel good for that short period of time, and then
The bill comes in.
Then you get the bill later, and you got to pay it off. Yeah.
Yeah. All right. So I think what a lot of folks really are concerned about, obviously, I think it was a major concern that was a key factor in the election, and that's just inflation. It's cooled considerably since the peak in 22,
Yeah.
as I recall. I mean, it's not at the target rate the Fed has of 2%, but 2.5, 2.6%. It's not far. It's very stubborn, though, once you get to that point.
Yeah, we're to that point where that last little bit it's sticking around, right?
Yeah.
And I think that obviously the Fed made their hawkish cut, right, in December, where they essentially said, yeah, we're cutting, but there was a lot of dissent within the committee as to whether or not they should, and they kind of indicated that they're going to keep rates up longer. Now, I think that they're going to get a lot of political pressure this year to cut more than they're anticipating. So going into 2024, we said there's no way they're cutting 6 times, and they didn't. This year I'm kind of saying, you know what, I think a surprise might be that they have to cut a little bit more. And if we get any downdraft in the economy, President Trump will be all over it. If you remember 2018, on Twitter just ripping Powell.
Yeah.
Right? So he's not going to be scared to put a lot of pressure on them
No
to
doubt.
cut.
So I have seen, however, some analysts even suggest that we may see a reversal, rate increases in third, fourth quarter next year.
See, the only way that would happen is, all right, President Trump enacts all of these tariffs.
Yeah.
Right. And all of a sudden it spurs significant inflation.
Right.
I don't see it happening. I really, really don't. I think that we're to a point where housing affordability is an issue. Consumers are getting a little bit tapped. I think you're facing a little bit more slowdown pressure. I mean, you're also talking about the DOGE committee going in and just hatcheting a lot of government spending. Well, that's going to be a cooling effect on the economy. Now, look, needs to happen, as we've talked about a lot, but that's a cooling effect. So I think that analysts that are talking about rates having to go up this year are off. I think the Fed's probably going to have to cut more than they're indicating.
Really? Well, let's talk about this. What's the market overall expecting? Because that drives their sentiment and it is a big factor in how they deploy capital.
Yeah, I mean, I think overall the market is expecting a few rate cuts.
Okay.
I think that they're kind of in this camp that the Fed's, they've told us that they're going to cut, but that the pace that they're cutting is going to slow down.
Okay.
I think that what's going to end up happening is they're going to start on that path. And as we get a little bit deeper into the year, there could be necessity for more cuts.
Yeah. From a guidance perspective, so we've had a month or so of earnings season. Really nothing that was earth-shaking there. Nobody came out and just gave just awful, terrible doom and gloom guidance, but seemed to be, I guess, a little more reserved than any just massive run.
Well, what you saw was, and this is kind of why we saw the whole Trump bump just fade off at the end of the year.
Yeah.
Was, I think people heard guidance. They said, well, it's okay. It's not great. It's not doomsday, but it's not great. And the market was really pricing for great. And so you got a little bit of a fade at the end of it.
Yeah, that's certainly what it seems like. I would tend to agree with you. All right, we got a break right here. We can keep talking if you can hang around. We got
Absolutely.
Jeremy Nelson, partner at Element Wealth, in the Element Wealth studio. We're coming right back. So we're back in the Element Wealth studio with Jeremy Nelson, partner at Element Wealth, just doing a rundown of 2024, which was a great year for markets, for investors, and what we might see in 25. I know one thing I think that could tank the market, Jeremy, and want to get your take on this, is if the Republicans don't get off their butt and pass the tax legislation to extend or make permanent the TCJA.
Well, I think, what you saw with the markets, once Trump went up in the betting odds, markets kind of went up. Then he won, and then they went up even more. Then all that faded off. But a lot of it revolved around the idea that, hey, the probability that we're going to get the extension of these tax cuts or making them permanent, that got the animal spirits, kind of in the market going. If they don't get a deal done, that starts to create a lot of risk, because now all of a sudden, you go to the midterms. What have we seen over the last decade or so? I mean, it's midterms, everything flips over and over, right? And so I think that the Republicans really have to go and get this done now. I think that they have to be realistic and stop talking about cutting taxes on Social Security and look, because that's going to be a no-go. The majority in the House of Representatives is very thin, and so they're going to have everybody on board. And so what they really need to just push is, hey, this tax code's working. Let's just extend it.
Agree.
Let's just leave the rules the same. We don't have to make a bunch of adjustments. As long as we keep taxes here, they're still historically very low. Let's just make them permanent.
Yeah. Well, and the president-elect, of course, as you know, he made that a key part, a key component of his platform from a fiscal perspective, which is exempting, as you well know, tips, overtime, and Social Security from taxation, federal taxation, as well as lifting the SALT cap. The other big problem with that is, as you point out, we got a thin majority in the House, and that the more you pile into the bill, the more difficult ostensibly it makes it. But once you get to the Senate, then you're dealing with the filibuster situation and the parliamentarian rules on whether or not all that combined could pass through reconciliation rules, and you may tip it over whatever all those constraints are, which means you'd have to pull some at least 7 if you had all Republicans, 7 Democrats to get the legislation through. So maybe a little aggressive. I'm with you. Let's, at a minimum, guys, let's get this thing through.
Yeah. Like, you've got a 2-year window here. Yeah. Go and get this done.
Yeah.
Well, and really, you need to get it done this year.
Early.
Because otherwise, next year, we're reverting.
Yeah, no doubt about it. It ends at the end of this year. And the other thing I believe is that businesses need that clarity, and
Absolutely.
they need that certainty. And if that hangs on till the end of 25 and you're bumping against the thing expiring, you know what's going to happen. They hunker down.
Yep.
Right? And they don't make major capital investment. They don't take more risk or expand or hire people. And that then has an effect on the economy. And then the next thing you know, you're campaigning for the midterms, right? And and then the people say, well, you didn't do anything. I'm going back to voting for the Democrats. Those people that can go back and forth in these iffy districts.
Yeah, exactly. And I want to make one point on this whole Social Security thing, because I know it sounds terrible that a Gen Xer like me would say baby boomers should pay some taxes, right? But no, the majority of people who only rely on Social Security, they're not paying tax on it anyway.
That's exactly right.
So this is my whole point to it is, you've got a standard deduction that's $30,000, right? So that just means you're not paying tax on your first $30,000 of income anyway. And then only 85% of Social Security is taxable anyway.
Over 32, I think it is, something like that. First 25 is exempt.
Yeah, and so at the end of the day, it's like anybody who's living off of Social Security alone really isn't paying tax on it anyway.
That's right. I think when I looked it up, it was like 40% of Social Security recipients actually incur federal income tax on their Social Security benefits. And it's not because that they only, as you indicate, not because that their only source of income Social Security, is because the way the calculation works, if you've got outside external income, maybe you've got a 401k on top of that that's producing income for you, or you've got other interest or dividend-bearing investments that generate rent, something like that. Well, all that pushes you over the thresholds, which makes some of your Social Security taxable. Yeah. So you're right. The people who would benefit are those that are at the higher end of the income scale and receiving Social Security.
And they're going to benefit enough from the tax code passing and the markets continuing to do well.
Totally agree. I'm with you on that. It sounds like a good idea, I guess, on paper and in a populist setting, but the reality is it doesn't affect a whole lot of people. And by the way, that was enacted under Ronald Reagan. He was looking for a source of income. Because that's the other thing that needs to be pointed out. I know you're aware of this, but for the benefit of our audience, all the tax revenue generated from Social Security benefits goes into the trust fund that's used to pay benefits.
Exactly, and we're already underfunded.
Right.
So we're going to make it more underfunded?
To the tune of about $200 billion. Yeah. So, so we'll see where that goes. But my concern is, Jeremy, is that you got the Senate Majority Leader John Thune says, we'll get to that tax cut thing later.
They need to get to it now. Like, you've got 12 months before this expires.
I agree.
Like, this should be the number one priority.
I agree. Newt Gingrich says it needs to be in place by July 4th, 2025 to give it time to filter through the economy. We can breathe a sigh of relief now. We know that the tax environment's going to stay where it is. We can proceed with our business plans, which boost business, and not only that, boost supply to moderate inflation.
Yeah.
Hopefully they get this.
I really hope that they do. And again, this has to be day one.
I agree. Day one. Couldn't agree more.
It's the most important thing on the docket.
Are you hearing this among your peers in the industry?
I think that there's a level of complacency that they're going to get it done, but there will begin to be panic if they don't start making progress on it.
No doubt about it. And if we see this slip into the third, fourth quarter, markets are going to react to that.
They will react very negatively.
No doubt about it. Every single day. Man, and President-elect Trump would have a fit if he starts seeing those ticker tapes.
No, look, you're right. I mean, he wants the markets to be higher. I mean, he went on Wall Street and Jim Cramer did that interview with them and talked about letting the bull run, and he said that's what we're going to do. So he absolutely sees the stock market as a barometer of how well he's doing.
Yeah. All right, so if someone is approaching retirement, we got a new year coming up, and they've got a little bit of a nest egg. Of course, we'd like to see them call your firm, Element Wealth, give you a call and talk about that. But tell them how you handle a typical account like that.
Well, so it all starts with creating a customized financial plan, right? Because everyone's situation is unique, right? Yeah. So what you really want to do is build the balance sheet. All right, what do we have from assets? What do we have from liabilities? Cash flows. What's our Social Security look like? How long are we going to continue to work, right? And then what you really want to do is begin to optimize that, right? You want to optimize your Social Security elections. You want to optimize for taxation, right? Should you be looking at Roth conversions or different things like that? Then risk analysis. It's very important that people understand where the risk in their portfolio is and that it's appropriate, that they can handle. Look, we've had a few good years here, so nobody's complaining. But there are downturns, right? Can you handle the downturns in your portfolio? And then lastly, really building that customized income plan so that hey, here's where my paychecks are actually going to come from in retirement.
Yeah. Well, full disclosure, it's exactly what you and I did. When I came to see you about helping me with that, and been very pleased with that. It's worked out well. And what you just described is exactly what we've done.
Yeah.
And then I don't have to worry about it. Of course, I check it, and every now and then I'll send you a note, say, hey, we got this, that, and the other going on. But in general,
it spits out the dividend.
Exactly, and that's the main thing. Keep all that going. So, but trying to do this on your own, it's tough.
It's tough.
You don't have access to the tools, and you're not working on it continuously on a daily basis, and it can be kind of a hassle more than anything. So, well. I am optimistic. We're going to have a fantastic economic and financial year in this country, and that folks are going to prosper, and we're going to continue to produce wealth. We are the only country on the planet that can do it at the level we can, and I think good times are ahead. I really do.
I absolutely do. I think that you're going to see a positive year in the markets. Maybe not as positive as it's been the last couple of years.
Yeah.
But we'll grind through here.
Absolutely. Appreciate it, Jeremy. Thanks for coming in.
Thanks, Gerard.
We're coming right back, folks, in the Element Wealth studio.